Hello?
Okay, hi Brogan.
Okay, yeah.
Alright, so let's have a look at the last bit, which is the May-June 2017 paper that you actually tried last semester. So this is a good idea of review in terms of seeing what you would have done, okay, and then
Yeah.
looking at how you should approach it. Okay, and then obviously you need to try fill in the gaps. Okay, so that's the biggest tip that I can give you is if you're doing past papers, do the past paper without looking at the answer. See how that goes. Then take the answer, mark the answer, and see how much of it you got right. If your answer is very similar to the solutions that I've provided, then you know you're probably passing the paper quite well. If it's very different or you've left out a lot, that means you're missing gaps in your knowledge and information in terms of approach. Okay, and that I don't know, that I need to look at actual papers that you've done to be able to comment on whether you're doing it correctly or not.
Yeah.
Okay, so if you are doing questions and if you want to send it to me, then send it to me. I know you said you had problems with the emailing of it, but then just take a photo then if you want to. But the thing is, the only reason why I'm asking you to do that is so I can see what the approach is and I can see what areas you're maybe struggling with.
Yes.
Right, so this is how we're going to approach May-June 2017. The first paper. So this was the original one. Obviously, UNISA had some problems last semester with late registrations and all of that, so they actually had two opportunities for students to write. So if you wrote the first one, you would have got this paper. If you wrote the second one, you would have had paper 2. Okay, so we've looked at paper 2 already. We've covered that one. Now we're looking at paper 1. This is May-June 2017. Good exam technique is you go to the proposed timetable, you look at it, and you try find the easier questions to do. So which questions are normally easier?
The short questions.
Correct. I would be looking at this being easy, and disclosure also is easy. So closed corporations, remember, CCs is the closest thing that you'll get to a sole proprietor because everything is recorded and it's all kept separate. It's like FAC1601 all over again. Right, so 2 should also be a question that you should be quite comfortable with.
Yeah.
It shouldn't take too long and it shouldn't be too difficult to pass both of those questions. Right, then you've got a long partnership question, lots of disclosure there, and you've also got a short cash flow question here looking at only one section, operating. Okay, so what I'm going to do here is I'm going to start with question 4 because I'm going to bank 10 easy marks and it's not going to take me very long to do, 12 minutes.
Yeah.
So let's go to question 4. Here's
Okay.
question 4, 12 minutes short questions. 5 short questions of 2 marks each. Question number 1. Well, question 1, 4.1. Question 4, sub-question number 1. Right, so, according to the conceptual framework, what are the criteria for an asset to be recognized as an element of financial statement? So you tell me, what can you tell me about an asset? What is an asset an asset?
An asset is when you get future value of something. So it's something that it's a natural resource that you get future value of, so money out of it.
Correct.
Like
You can
land and
literally
buildings.
just give the definition. Okay,
Yeah.
an asset is defined as a resource controlled by the business arising from a past event that will give rise to a future inflow of economic benefits.
Yes.
Okay, if you want more information about the conceptual framework, the textbook is very good. On page 12, they give you a whole page of information relating to the asset. Right, but as I said, the definition is the key. That's what they would be wanting here. Resource controlled by the entity rising from a past event that leads to future economic benefits. That's good enough. It should give you 2 marks.
Yeah.
Theory. Easy 2%. Number 2. Karabo and Busi are in a partnership trading as KB partners. Okay, so focus on partnership knowledge and information now, because that's what the question is asking you for. They share profits and losses equally. The partners have decided to admit Pumla. Okay, so what must we do? Draw the partnership.
Yeah.
Existing and new. Okay, that's how we approached it when we did this partnership, when we did the partnership theory long ago. Okay, so I follow the same approach. Existing, how many partners? K and B. New partnership, how many partners? K, B, and P. Do you agree?
Yeah.
Okay. Then, what do they say? It was agreed that Pumla will contribute 210 in cash, as well as a vehicle valued at 90 for a 1/5 share in the business. So, she wants to buy 1/5 of the business, and she's going to have to pay cash, and she's going to have to give a vehicle worth 90,000. Right, gives us a total contribution of 300,000. Makes sense so far?
Yes.
Okay, this is a goodwill calculation. So we did the goodwill calculation in the study guide when we covered the theory. Now we're doing a different question, which is very similar to the one that's in your study guide. Okay, that's what I'm thinking about. So when I'm doing this question, I'm trying to remember all the information relating to goodwill and partners.
Yeah.
Okay, what else do we have? Well, the total equity of the partnership after admission of Pumla amounted to 940,000. So that's even easier. They're not even talking about existing. They're telling you what the equity is of the partnership. Equity of the new partnership is 940,000. That's what they're telling you. Okay, so all you have to do is just remember the equation. So goodwill equals total purchase consideration. See, this is what you'd have to study. This you'd have to know. Okay, consideration minus equity of the business, equity of the partnership.
Yeah.
Right, so normally the example in your study guide is actually more complicated, because there you had to work out this, the existing. Looking at this question, this is actually very basic, very easy. Okay, it's only 2 marks. It can't be a long question. If it was, it's going to take up more than 2 marks. Right, so how do I do this? I work out the total purchase consideration. Right, so goodwill equals, if 1/5 is worth 300,000, how much will the full business be worth? Times by 5.
Yeah.
Do you agree? 5/5 make up the whole business. Does it make sense? Okay, 300,000 times 5 over 1. Okay, and then subtract 940,000. Gives you an answer.
Yes.
$560,000 goodwill. And there you go. Another 2 marks.
Yes.
Happy with that?
I am.
Okay. 3, another 2 marks. What is 3 asking us for? Let's have a look. Three says, Mazwi and M and S are in a partnership trading as S and P. The partners decided to dissolve the partnership on 31st of March 2016. Okay, the partnership has trade creditors amounting to 360 as the only asset in its accounting records. The partners informed the debtors that they will receive 10% discount if they settle their accounts on or before the 10th of April. 80% of the debtors settle their debts on the 9th of April, meaning 80% of them would have received the discount. Do you agree?
Yes.
Then they say the partners resolve that the remaining will be written off as irrecoverable. What do they want here? They want to calculate the amount that must be recorded as payment from debtors in the liquidation account of the partnership. Okay, so that's easy. Again, we just need to work out what your accounts receivables are, basically. Okay, that's what they're asking you for. Tell them how much is the total accounts receivable. Right, so how much do we have? Well, the total trade debtors, or accounts receivable, it's just two words for the same thing, is how much? 360. Do you agree? Alright, what happens to this 360? Well, of the 360, 80% pay before 9 April and get a discount. Do you agree?
Yes.
And 20% wouldn't have paid.
Yes.
That's what we've been told. What we also know is the ones that pay, and they pay before the 10th of April, will receive a 10% discount. Right, so we still need to apply a discount of 10%. Less 10% discount. Right, so how do we take off the discount? Well, that's easy. We just take that amount, okay? Let's times it by 80%. Times by 80%, this amount will be paid before 9th of April, and the other 20%, 72,000, will be paid, well, would not have been paid, okay, would have been outstanding. Okay, then we have to take off a discount from here. So this must be reduced by 10%, so the net amount equals this times 90%, which I'm taking off 10%, gives me that. Okay, that's after the discount. Okay. What else do they have in the question? They said calculate the amount that must be recorded as payment from debtors in the liquidation account of the partnership. So payment from debtors. If you're looking at the payment from debtors in a liquidation, so this would have been a, it wouldn't have been piecemeal, this would have been a simultaneous liquidation. Liquidation. Okay, in a simultaneous liquidation, what do? We just sell everything and we try to get as much as we can, and then we ask the partners to pay each other out and then leave the business. Do you agree?
Yes.
Okay, so in this scenario, what are they asking us for? They want the amount that must be recorded as payment from debtors. So what are the debtors actually paying? Which amount that we've got here on screen? The 360, the 288, or the 2592?
It won't it be the 2592?
Exactly. There we go. Right. The amount paid by the debtors is what we just worked out. Okay. And that's it. 2 marks for that. Number 4. MS and A are in the members of MSA. There's an extract of their financial statements. Calculate the return on equity expressed as a percentage. Right, is that it? Yeah, that's the end of that question. Okay, so they only gave you that. That's fine. We're going to need that equation again. So go back to your formula. Okay, there's return on equity. I want this. Okay, this is question 4. Right, so return on equity is profit before tax divided by total equity. Do you see profit before tax here? No, so I need to work it out. Do you agree?
Yes.
Profit before tax will be calculated looking at income and expenses. Right, so revenue is income, so 320 minus cost of sales is 112. Okay, minus admin expenses of 83. Okay, the finance cost would be interest, so you wouldn't take that off. Actually, you would, because it's profit before tax. So it's before tax, but after interest. Okay, so you'd have to subtract the interest minus the financing cost of 14,000. Okay, you wouldn't take the interest off because it's before tax. Okay, divide that by total equity, which is your capital, 505,800.
Yeah.
Times by 100 gives you an answer. Do you see how easy that is if you know what the equation is?
Yes.
Okay, so you do need to study the equations in order to get the correct answer. Right, and that's my final answer. 2 marks for getting that percentage. Return on equity for this business is 21,94543. All you had to do was work out the profit before tax, which was a little bit tricky to do. Okay, just remember it's before tax, so you don't take off the income tax.
Yeah.
Great. The last question in this paper was number 5. MSA has a branch in Durban. Inventory with the selling price of 20 was dispatched. Okay, so dispatch meaning traveling from one city to the next. They want to know, calculate the amount to be recorded in the branch adjustment account for the inventory sent to branch. Okay, so 2 things here. I'm going to revise. Inventory to branch is the HO, head office account. Okay.
Yes.
Branch inventory is whose account?
The company.
The branch. Okay.
Okay.
Does that make sense?
Yes, it does.
Okay, so what are we doing here? We're taking stock from head office to branch. That's what they said here. They said MSA has a branch in Durban. Inventory with the selling price of 200 was dispatched by MSA head office to its branch at cost plus 20%. They want to know, calculate the amount to be recorded in the branch adjustment account for the inventory sent to the branch. Okay, so if I'm sending inventory to the branch, we're going to have a branch inventory T account that's going to look like this.
Yeah.
We're going to have a debit for, what date was this? Okay, no date here. So we'll just have inventory to branch. Okay, that must be at cost price, CP, cost price. And then you'll have inventory to branch at MU, which is markup. Okay, what did the question say? Selling price of 20,000, but this was at cost plus 20%. Okay, so cost price plus markup equals selling. Cost price is 100, because it's on cost price. Markup is 20, so selling is 120. See, there's your ratio. Okay, you need the ratio to work out the amounts. Okay, so selling price was given as 20,000. That was cost plus 20%. Okay, so they gave you this, 20,000. They're asking you to calculate those missing figures. Okay, so cost price is going to be 20,000 times 100 divided by 120.
Yeah.
Gives you 166. Okay, and then inventory to branch will be the 333. Okay, so have we answered the question? Calculate the amount to be recorded in the branch adjustment account for the inventory sent to the branch. Okay, so the branch adjustment would have been the markup part of it. Okay, so branch adjustment, asterisk, the branch adjustment account calculates the profit or gross profit. Okay, so the markup would be the gross profit amounts. Okay, so they're actually testing you on your mathematics. Would you be able to split cost and markup from selling? That's how you would do that question.
Yeah.
Makes sense?
Yes, it does.
Great.